Hey, Suffield, Connecticut homeowners, contemplating a move but confused by what's going on in the market? Get some insights from this month's Suffield Housing Market Update, Connecticut. I'm Stephanie Salerno, a local realtor in Suffield, Connecticut, licensed in Connecticut and Mass, and I'm here to give you the latest scoop on the housing market. So first, let's take a look at what's been happening in Suffield. In Suffield, in March, 14 homes were sold, and that's up 133% from March of 2023. 5 new listings came on the market, and that's down 50%. The sales price to list price ratio is 105.46, and that's actually up 5% from March of 2023. And the average sale price per square foot is $251, and that's up 14%. March's average sale price was $620,000, and that's up 27% from 2023. And the average days on market was 127, and that's down 92% from 2023. Now, that seemed a little high based upon how quickly homes are coming off the market. So I took a look at the data below $500,000 and above $500,000. And you can see here that below is 55 days on the market, but it shoots up when you're over $500,000 for 147 days on market. So clearly, houses on the upper end of the market are a little slower to sell. Now, taking a look at inventory, the month supply of inventory for March was 0.93 months, and that's actually down 79% from March of 2023, and even down from February of 2024, which was 2.33 months. Okay, so how that works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So at 0.93 months, we are incredibly low inventory and very much still in a seller's market. And I was actually surprised to see inventory numbers so low because most experts have predicted the return of seasonality. So it's a little crazy to see inventory levels lower in March than they were in February. Okay, so this month I want to revisit 3 things: prices, interest rates, and home equity. I feel like those are the 3 points I hit almost every month because those are the trigger points that we're seeing right now in our market. Our current market is incredibly challenged by inventory. And even though experts were predicting that inventory would increase this spring, we're yet to see that in our local market as just evidence that Suffield's down from last year and is even down from the previous month. It's hard to believe that March was down from February. We have more buyers than we have houses to sell them, and simple supply and demand economics, that is what has kept upward pressure on pricing. This graph here shows the increase in home prices for the different areas of the country over different time periods. And what it shows is when we look quarter over quarter, the national average for a percent in price change was 1.5%, year over year 6.5%, over the past 5 years 59.2%, and since 1991, the national average was 311.9%. And if we pay close attention to Connecticut, you can see that Connecticut outpaced the national average in most cases. The FHFA said that U.S. house prices rose 6.5% between the fourth quarter of 2022 and the fourth quarter of 2023, according to the Federal Housing Finance Agency and the House Price Index. House prices were up 1.5% compared to the third quarter of 2023. Now, many economic factors contributed to where we are today. New construction just didn't keep up. The millennials, which is a huge population, all reached their peak buying age, and mortgage interest rates created a bottleneck in our market. Sellers that want to sell want to buy a new home, but don't want to lose their 2-point-something or 3-point-something interest rate that they locked in just a couple years ago. Part of the predictor I believe that all experts were thinking would see the return of some inventory in the spring was the anticipation of mortgage rates decreasing. And many buyers, sellers have normalized to the idea that we're not going to see a 2-point-something or 3-point-something interest rate anytime soon, and they no longer want to put their plans on hold. But that brings me to my next point. What's happening with interest rates? Well, there's conflicting reports that the Fed will cut rates between 0 and 2 times before the end of the year. So what will actually happen is anyone's guess. But we can safely say that rate cuts will either happen later than we initially anticipated, or perhaps not at all, and rates will hold stable through the end of the year. That's super helpful, I know. But for my homeowners out there that need to buy in order to sell, please understand there's a long-standing relationship between mortgage rates and buyer demand. When rates do come down, more buyers are going to enter back into the market. And that means you're going to have a lot more competition when you go to buy your next home. And that can make the move more stressful if there's an increase in buyer demand, creating more multi-offer scenarios and prices increasing faster. So if you're ready and able to sell now, it may make sense to explore that option and get ahead of the curve. Dr. Selma Hepp, chief economist at CoreLogic, said, rising home prices continue to fuel growing home equity, which at $298,000 per average borrower remains near historic highs at the end of 2023. By extension, at 43%, the average loan-to-value ratio of the U.S. borrowers has also remained in line with record lows, which suggests that the typical homeowner has notable home equity reserves that can be tapped if needed. And this FHFA graph shows that we have seen 48 quarters of positive price appreciation. That's pretty incredible. Now, this map shows a great graphic to show that the average U.S. homeowner gained an average of $24,000 in equity during the past year. And if you look closely at Connecticut, you'll see that number is even higher at $45,000. So here's the bottom line. Prices are not anticipated to come down anytime soon, despite what some headlines may say. And inventory remains low, and I'll be watching April inventory closely as we securely plant ourselves into spring market. But listen, even if inventory doubles, we are still going to very much be in a seller's market and not anywhere near what's considered a balanced market. And that could be very good news for you as a home seller. What happens with interest rates this year will certainly impact buyer demand and could also increase competition as you look for your next home. And lastly, you are in an incredible equity position, and there are ways you can leverage that equity to reach or even exceed your real estate goals to help fuel your next move. So whether you're looking to sell or you might just want to discuss what options exist for you, please reach out, as I'm here to help you make the most out of your equity and help you achieve your real estate goals. And if you want to see what your home might be worth, click that link below for an instant home valuation on your property. As a local realtor in Suffield, Connecticut, I strive to provide you with the local insights to help navigate our market with confidence. And if you found this information useful, please give us a like or share this information with a friend. And to receive future market updates, hit that subscribe button below. All right, this is your April Suffield, Connecticut housing market update. We'll see you next month.